Good morning, degenerates, and welcome to another episode of Boring Crypto IO, the place where I read you the boring crypto news every morning, Monday through Friday, just so you don't have to. My name is Not Important, and I'm your host, LFG. Stablecoin payments, Visa shares plans for ambitious crypto product. Third round of ETH withdrawals sees roughly equal amounts of deposits. Bullish on ETH. Coinbase files court action to compel SEC's response to rulemaking petition. And last but not least, Bybit to introduce mandatory Know Your Customer requirements starting May 8th. A handful of people that I know that trade heavily on there from crypto Twitter have been exiting the platform because of this. Interesting stuff. Onto the market. Market cap sitting at 1.151 trillion. Bitcoin dominance still pulling back 46%. ETH dominance 19.1. And ETH gas 32 way. Everything is really boring. No pun intended. We have seen Bitcoin move pretty much sideways, lulling us to sleep right now. Looking at the market, it's red. A couple percentages here and there, nothing crazy right now, guys. Let's just go ahead and move on to Bitcoin. I'm probably not going to spend too much time on the charts today because of how boring Bitcoin has been going. This is Bitcoin on the 4-hour. This is literally just sideways movement bouncing between the 27,981, we'll call it 28, and back down to that 27.3. 27.3-ish with wicks down to this 26,977. Let's call it 27. But what I am seeing here on the 4-hour is lower highs, right? Another channel. We'll call that wick a fake out. Something like that, right? Eventually, these tend to break to the upside, but the question is how far lower are we going to go with these? I've got to be honest, guys. All of this price action to me is looking very weak and concerning. If we do break, I think if we break 27, we're looking at potentially 26.5 and then 25. Let's see what that percentage pullback is. It's 10% pullback, 840. I think it could happen, guys. I'm not saying it will happen. I'm not saying it won't. I'm not even a good trader, so don't listen to me. This is not financial advice. I'm not a financial advisor. You know the drill. But look, don't be surprised if it does happen. Just be prepared if it does. I think the story that Bitcoin potentially get back down to 25 is looking very strong right now. That's just where my head's at. Sorry to be bearish, guys. I don't want to be, but that is what I'm seeing. Outside of that, let's get you on the news. Stablecoin payments, Visa shares plans for ambitious crypto product. Visa's upcoming crypto product is designed to drive mainstream adoption on public blockchain networks and stablecoin payments. Global payment giant Visa continues to explore benefits of the cryptocurrency industry with a new initiative focused on stablecoin payments. Kui Sheffield. Is that how you pronounce that? Kui? Because it's not a G, it's a C. Kui Sheffield, head of crypto at Visa, took to Twitter on April 24th to announce a new cryptocurrency related project developed by the firm. Visa's upcoming product is designed to drive mainstream adoption of public blockchain networks and stablecoin payments, Sheffield noted. There's his tweet. According to a Visa job posting published on April 20th, the company's crypto division is buying the next generation of products to facilitate the digital commerce of everyday life. In order to develop the product, Visa is seeking to hire software engineers focused on programming back-end system Web3 technologies, particularly interested in experience using GitHub, Copilot, and other AI-assisted engineer tools to write and debug smart contracts, Sheffield wrote on Twitter. Among preferred applicant qualifications, Visa listed a good understanding of Layer 1 and Layer 2 solutions alongside experience with writing smart contracts using the programming language Solidity, introduced specifically for Ethereum, for the Ethereum network. Solidity is used to create smart contracts on blockchain platforms and generate a chain of transaction records in the blockchain system. The position also requires good understanding of public and permissioned distributed ledger networks, security protocols, private key custody, as well as new Ethereum enhancements such as ERC-4337. Again, I'm bullish on ETH with all this stuff. One of the world's largest payment companies, Visa, made a major move into the crypto industry in 2020, partnering with blockchain firm Circle to support the USD coin, stablecoin on certain credit cards. The firm has been gradually expanding its crypto offering, but halted some new industry partnerships due to the crypto bear market of 2022 and major industry collapse like Celsius and FTX. Look, more mainstream adoption of the crypto space, guys. Good news. Moving on. Third round with ETH withdrawals sees roughly equal amounts of deposits. Another chunk of ETH has been withdrawn due to Kraken, but deposits going onto the network have almost matched them. Ethereum staking withdrawals have entered their third round, but ETH staking deposits have almost equaled them, according to data from the analytics platform Nansen. Ethereum staking withdrawals started ramping up for the third time. F-I-R-D, guys. I can't talk. For the third time on April 24th and into April 25th. According to Nansen, the crypto exchange Kraken was responsible for a large portion of these withdrawals. A round refers to the number of days taken to process partial withdrawals and rewards. Nansen says it currently takes just under 4.5 days. The last large batch of withdrawals on April 24th was a total of 61,608 ETH in principal and rewards withdrawals. However, at the same time, there were 63,009 ETH deposits reported by Nansen. This has resulted in zero change in the balance of staked ETH over the past 24 hours. Intriguing. Check that out. In February, Kraken was forced to halt its Ethereum staking services following enforcement action and a fine by the United States Securities and Exchange Commission, which accused it of selling unregistered securities. As a result, much of ETH withdrawn early on has been from Kraken wallets as assets get returned to stakers. According to Nansen, 2.3% of the total withdrawals of the total withdrawable ETH remains from Kraken. Nansen currently reports there is a total of 632,651 ETH waiting in the pending withdrawal queue. At current prices, this is valued at around 1.16 billion. That's a whopper. Before the last wave of withdrawals commenced, Nansen reported an all-time high in the total amount of staked ETH. The figure hit 18,796,663 ETH, valued at around $34.5 billion on April 24th. The current figure, which is slightly lower than this peak, represents 14.5% of the total ETH supply. Due to the EIP 1559 burning mechanism, the total supply has declined by 114,077 ETH, around $209 million since the merge in September. Concerns over a massive exodus of staked Ethereum following the Chappelle upgrade have been quashed. Can we just say squashed? I hope that was meant to be squashed and not quashed. People trying to just make up words these days. Token Unlocks is reporting that a total of 1.66 million ETH has been withdrawn since April 12th, but 1.07 million ETH has been deposited, signaling there is still quite an appetite for staking ETH. Why wouldn't there be? It's free money. Let me know what you guys think. Comments down below. Moving on. Coinbase files court action to compel SEC's response to rulemaking petition. Coinbase is firing back. Coinbase is looking to force the SEC to respond to its petition seeking rules for the crypto industry, a request that's been pending since July. Coinbase has filed an action in the United States federal court seeking to compel the country's securities regulator to provide a yes or a no response to a petition that exchange has had pending since July. The petition requests the Securities and Exchange Commission to propose and adopt clearer regulatory guidelines for the cryptocurrency industry in the U.S. In the petition, the exchange asked the financial regulator to answer a total of 50 specific questions concerning the regulatory treatment of certain digital assets. The questions are broad in scope and range, including asking the SEC to provide clarification about how it goes about clarifying tokens as securities. Get them. Accompanying the action was a blog post panned by Coinbase Chief Legal Officer Paul Grewal, who said the Administrative Procedure Act requires the SEC to respond to the exchange's rulemaking petition within a reasonable time. There's his tweet. Go check it out if you want. Now that more than 9 months have passed with no response, the exchange is pushing hard to get an answer. It seems like the SEC has already made up its mind to deny our petition, but they haven't told the public yet. So the action Coinbase filed today simply asks the court to ask the SEC, middleman the court, to share its decision. It's important for the SEC and any other agency petition for rulemaking to respond to the petition once the agency has made up its mind, especially if the answer is no, Grewal explained. Grewal explained that clarity on these matters is of the utmost importance, especially considering the fact that Coinbase received a Wells notice on March 22nd, which hints at potential enforcement action against the crypto exchange. Coinbase and other cryptocurrencies are facing potential regulatory enforcement actions from the SEC, even though we have not been told how the SEC believes the law applies to our business, Grewal added. On February 9th, Kraken reached a settlement. We all know this. For failing registered, blah, blah. Exchange agrees, blah, and handed over $30 million to the SEC. It's a money grab. How is an exchange paying a fee of $30 million to the SEC helping investors? It's not. It doesn't do anything for investors. It just puts money in the pockets of these turds. Sorry. This move proved unpopular internally, with the SEC Commissioner Hester Pierce labeling the SEC's conduct as not an efficient or fair way of regulating, and slammed her own agency for shutting down a program that has served people well. Earlier in the year, on February 12th, the SEC and the New York Department of Financial Services ordered Paxos, the issuer of US dollar pegged stablecoin Binance USD, to stop minting and issuing the token. Adding to the slew of action against crypto in the US, Democratic Massachusetts Senator Elizabeth Warren, announced on March 31st that she would be forming an anti-crypto army as the key part of her Senate re-election campaign. Who's joining your army, Elizabeth Warren? Oh, more people from Congress that you're all buddied up with. Got it. No one in the private sector that is actually a retail investor. Right. Got it. As the U.S. becomes more fervently opposed to crypto industry, by U.S. they mean the U.S. government, not us as people, Coinbase has signaled its intention to potentially move part of its, I'm saying potential because it's not, this is bullshit, has signaled its potential intention to move part of its operations elsewhere. On April 19th, Coinbase received a license to operate in Bermuda and is reportedly seeking to launch a derivatives exchange there as soon as this week. With Coinbase being the only publicly traded cryptocurrency exchange in the United States, analysts will be looking at the exchange's upcoming earnings report on May 4th to gauge the health of the wider crypto sector in the U.S. Yeah. Get them, Coinbase. This is all garbage. Sorry, guys. I'm trying not to sneeze right now. Ooh. Allergy season. I am so sorry. All right. Last article of the day, guys. And we'll get you out of here. Bybit to introduce the mandatory Know Your Customer (KYC) requirements starting May 8th. Users without Know Your Customer verification had a daily withdrawal limit of $20,000 USDT on Bybit prior to the announcement. Starting May 8th, Know Your Customer identity verification will be mandatory for all products and services offered by cryptocurrency exchange Bybit. According to an April 24th update, Bybit users who have not completed KYC by May 8th can only close existing open positions or orders, return loans, or withdraw. Any new trading activity will be restricted. Before the update, non-KYC Bybit users had a daily withdrawal limit of $20,000 and a monthly withdrawal limit of $100,000. There's their withdrawal limits. Users who completed level 1 KYC on Bybit could have a withdrawal limit between 1 million USDT and 12 million USDT depending on their level VIP status, as written by Bybit. Bybit ensures that your personal information will be encrypted and protected for privacy and security and will be used for the sole purpose of verifying your identity to better serve you. It is neither shared nor repurposed for any marketing. Well, you're sending it to the SEC and I'm assuming probably the IRS. The exchange said that the new KYC measures would take anywhere from 15 minutes to 48 hours to be implemented. In supporting the decision, Bybit outlined the need for security and compliance. Compliance is a key word there. Prevention of illicit activities and providing enhanced services and convenience in case of lost credentials. Bybit was founded by Chinese entrepreneur Ben Zhao in 2018 and is currently headquartered in Dubai. Earlier this month, the company was flagged by Japan's Financial Services Agency for allegedly conducting business inside the country without proper registration. Last month, the exchange introduced a MasterCard-powered debit card allowing users to pay in crypto. The move came just days after Bybit halted United States dollar transfers after the collapse of Silvergate Bank. Do you guys trade on Bybit? I don't. If you do, let me know and what you think about this KYC down in the comments below. Aside of that, let's look at Bitcoin one last time. Nothing. Boring. Sorry, guys. It's boring. All right. Outside of that, guys, per usual, if you enjoy the content I provide here on Boring Crypto IO, please, by all means, subscribe to the channel. Let's grow this thing. I give you guys the news every morning. Let's blow this channel up before the bull market comes. Turn on the bell so you know when I do post a video. And watch, like, and share all the videos that you like on all your social platforms. And I'll appreciate it, and I will thank you. And I'll see you guys bright and early tomorrow morning. I'm out of here.